In this video, I'll show you a trading strategy using the ADX indicator. This is a very popular technical analysis indicator that is used to identify the strength of a trend. So in this video, I'll cover the full trading strategy, but in the next video, I'll show you some live trading using the ADX indicator. So if you're interested in that, make sure to hit the notification bell and subscribe to not miss it. And without further ado, let's just jump right into the charts. Okay, so the first thing, we want to find the indicator. So of course, we're gonna go to TradingView indicator section and type in ADX. Once you have done that, under community scripts you will find ADX and DY. So once you have added the ADX indicator, make sure to double click on it. Make sure the input section says 14 and 20. For the sake of following this video, make sure you stylize the way I do it. So DY plus is green, DY minus is red, ADX is slightly purple, and the horizontal level is 20. Make sure you do all this and click OK. So let me explain in very basic terms first before we go inside the rabbit hole of how you can actually use it in advanced situations and make it work even better. So there are two obvious lines, green and red. For a buy signal, we want the green line to cross the red one in the upwards direction. That means it's a buying signal. However, we don't buy just yet. There's another line, the ADX line, which has to cross the 20 horizontal line. The middle dotted line that says 20 is the line to cross. Once everything crosses in the same direction, so let's say a buying scenario, like we are seeing currently, it's a nice little buy trade. So let's say we want to buy this position. We have a nice bullish engulfing candlestick forming. We have this nice little trend over here as well. Unfortunately, we do have a form of resistance over here, so we need to be careful. But since the current momentum is bullish, every time, it touches this trend, it goes towards the upside. There's likely going to be a squeeze and a pop towards the upside. And obviously the ADX indicator is telling us the same old thing, right? That we should be buying. So I believe this is a nice little trade. We could potentially increase our take profit level just slightly. So 10-10, something like that, just to cover the stop loss. And the obvious trend line, if it dips, we don't get stopped out. So now let's just see what happens. So it does go towards the upside very heavily actually, and in these situations, if the market steeply shoots towards the upside, this is a great trading opportunity to kind of maximize your pip gain, because look, this was the overall trend direction. You cannot really draw this trend, right? This is not going to be sustainable because of how steep it actually is, so it's going to have an exhaustion at some point. Now the indicator is still telling us to buy, so we could have potentially closed off 50% of our position over here, so 10 lot size, move our stop loss to entry for risk-free trading, or move it in half, whatever you want to do, it doesn't really matter. Could ride the wave further, so from 10 pips to 11, 15, 20 pips potentially, right? So it becomes not 1-to-1 risk reward ratio, but 2-to-1 in a sense. Now if you're happy with these profits, you could obviously close it, or you could wait for the ADX indicator to give you a sign on how to close it. So it nearly crosses the green and red levels. Just over here, the red line has crossed the green one. This is a sell scenario, right? It straight away tells us that we should sell. So even if you hold it and you wasn't satisfied with the profits, 11 pips, one more pip to go. Not great, right? But you probably would have carried on closing portions every single time. So maybe on 10 pips, you close 50%, on 20, another 25%, and now you've ridden it down with another pip profit. That could work. Now, even though ADX indicator worked well in this situation, we are still very blind when trading. So we need to add more technical analysis to improve this trading strategy. The most simple way is to add a few moving averages. So once we add the moving averages into equation, let's just see what happens. So the market goes towards the downside, starts trending in between the moving averages, but look at this. Where do you think is a great trading opportunity? So let's take a quick glance. Look, we had this nice little downtrend, right? Every single time it touched, what happened? It went towards the downside, right? Nice little rejection, 1 to 3 touch pattern, went towards the downside. We had the break of moving averages with the bullish engulfing candlestick, and even though some people would say it's a great confirmation and a buying opportunity, the ADX indicator line was not above the dotted line. We couldn't yet enter. So when could we enter? Well, we have this steep little uptrend. Obviously, it's not the greatest one. The steep trends usually have a huge pullback, but we'll see. We have the 2 moving averages over here covering our candlesticks, right? And the ADX indicator, as you can see, just slightly is above the dotted line. The green over here has crossed the red one. It shows bullish buying pressure. So if we enter the trade somewhere over here, so a nice long position, we would obviously want to cover the 2 moving averages. So this is another reason why you want the moving averages all the time. Let's say 20 pips, stop loss, 20 pips, take profit, something like that. A great little day trade, I would say, not a scalp, but a day trade. This would be really, really good. Now let's see what actually happens. Boom, it goes towards the upside, bounces off the moving averages, and oh, we nearly got stopped out. We nearly got stopped out twice, 3 times. What's going on? It's consolidated. We would have reached take profit low. Now this is great, and you know I'm not prepared. I opened a random chart and this is what happened, but this is the realistic results. This is why I open random charts, just to see what happens, and that's why I will trade with the strategy live in the next video, so make sure to not miss that. So why was this such a little good trade? Well, if we have a look, we had the previous area of resistance just over here. Bullish engulfing candlestick, what happened? Has closed above the previous area of resistance. This became support. So after the pullback, look what happened. Another bullish engulfing candlestick confirms buying pressure. It went towards the downside and then eventually shot up. This is a great buying opportunity, right? You could have maybe placed 2 to 3 trades over here already and it would have made you a ton of money. When we had this trading scenario, the ADX indicator was all in for a buy as well. Now we would have taken this trade 8:30 in the morning and it would have closed 17:55, so not too bad for a day trade. We would have kept it for most of the day, but in the evening time it closes 20 pips profit. What's not to love? But there's another thing we are missing. We're only looking at the 5-minute time frame, which sucks, right? We don't want to be looking at the 5-minute time frame only. Who in the right mind only checks one time frame? Well, no one profitable, that is. So this is where I want to introduce you to multiple time frames. So this is the 5-minute on Euro USD, and this is the 15-minute time frame. And look at this, everything is still the same as it was, and we can see that the trend over here on the 15-minute time frame has actually extended towards the upside like that. So this previous 5-minute trend that we had, that steep one I talked about, I said there's likely going to be a strong exhaustion after that huge spiky push towards the upside. There's going to be an exhaustion, and the exhaustion is likely the higher time frame bias, which would have been the 15-minute time frame. Now on the 5-minute time frame, I sometimes use the 200 moving average as well, and as you can see, it bounced off just here and broke out here, but we had this little trend line on the 15-minute time frame, which would have been our little escape, let's say, and this trade would have worked out in our favor. I mean, the most probable cases, I would have closed it off here because it was around, I don't know, 18.5 pips profit. I mean, 1.5 I wouldn't risk it. If I saw it, I probably would have closed it off early, but just in case you didn't and you kept the trade going, this trade would have worked out well as well. But yeah, next week I'm gonna try it out live, so I'm gonna link the video just over here. If it's not here, I'll just link a random playlist I think you'll love. But for now, Lions, make sure to try this out and take care. Have a wonderful day, stay safe, and goodbye.